Hey, you're watching The Everyday Investor. My name is Darcy Ungaro. Today I'm catching up again with Scott McLiver. He's a partner in the private business team at PwC. He's got a real keen interest in blockchain and digital assets. Last time I had Scott on the show, we were talking about Bitcoin. This episode, we're talking about central bank issued digital currencies. Have you heard about that one? Well, CBDCs is one of those ones where I've been thinking a lot about this. I've been trying to get my head around it as much as possible. I've even had the Reserve Bank on the show talking about this, and I'll link to that in the show notes. But what's really important about CBDCs is that whether we like it or not, whether we think it's a good thing or a bad thing, it's probably going to happen. And when it happens, it will change the way that we interact with our resource. We need to be ready for it, and we need to think about all the different ways that we can diversify our wealth, not just with what we invest in, but the custody layer as well. How do we hold these buckets of wealth that we're building for the new world that we're heading into? I'm not only interested in building wealth, but I'm also interested in protecting wealth, because the world that we're heading into, from my perspective, looks a little bit uncertain. So if that's of interest, then you're going to really enjoy this episode. Make sure that you like and subscribe. Remember, none of what we are talking about today, either Scott or I, should be construed as financial advice. This is opinion only, and it might get you into trouble if you take action on anything that we discuss. So definitely not financial advice, but we do hope it gets you thinking. Let's get started. So first up, what is a central bank issued digital currency?
They are basically the central banks of countries and economies saying, this Bitcoin and digital currency thing on a blockchain is actually quite interesting. You know what? And there's some real efficiencies and benefits that the participants in the economy can get from digital currencies. But you know what? We don't want everyone to be exposed to crypto volatility. And also, we don't want to lose control of our monetary system because it's too important to the safety of our economy and our people and our institutions. So what we want to do is we want to issue to the economy the ability to use digital currencies that are issued by us, the same as a normal dollar. So the functionality of a crypto dollar, but it's literally still a New Zealand dollar. And I think they'll be really powerful. I'm very supportive of them. And I think personally that they will live in a symbiotic means with Bitcoin and Ethereum and the successful coins, whichever they are, because Bitcoin will be, and I think remain, be like a digital gold, a decentralized tamper-proof kind of Swiss bank account.
Yeah,
correct?
Yeah, you're right. Yeah,
correct.
I get that.
So the Swiss bank account of the future is Bitcoin that can't be tampered with. But actually, I own Bitcoin. I strongly view that, and I feel that in 10 years I will transact mostly via New Zealand Reserve Bank issued digital currencies. Why? Because it's just a normal New Zealand dollar that's been upgraded to have the functionality of a digital dollar. And that's what becomes really interesting. What is that functionality?
Okay. I like the fact that you said that you're, generally speaking, I'm sure you don't think it's going to be a perfect blemish-free experience, but I like the idea that generally you're in support of it. You think it's a good thing, because I've heard a lot of stuff to the contrary, and I'd like to run some of the things past you in due course as we have the rest of this conversation, just to kind of sense check, is that real? Because I need to see the counterpoint to that, otherwise I can't form my opinion. Thinking about that sovereignty piece. So when I had a chat to the Reserve Bank around this, it was the issue of sovereignty, which I kind of really cottoned on to, and I thought that's an angle I didn't see before. Back then, this is before Christmas, it was about Facebook's DM, and it was about all these technology companies that were actually starting to get quite large, and how easy it could be with their networks to start issuing currencies and therefore monetize their networks or provide rails outside of New Zealand's financial system. And so the move to CBDCs, from my understanding anyway, was largely pushed by this sense of protecting New Zealand's sovereignty.
Well, there's a financial stability dimension. There's also what we call a monetary sovereignty dimension. So if you had some external, say you had a Facebook DM or some other product that came in, and people pivoted essentially away from New Zealand bank accounts into this international stablecoin. That would have a stability impact, presumably on the New Zealand banking sector, depending how extensive that was, but it would also have a monetary sovereignty impact, i.e. it would affect our ability to set interest rates and operate monetary policy in New Zealand. And one of the sort of founding assumptions in our paper is that New Zealanders value the Reserve Bank being able to operate monetary policy to suit New Zealand conditions, not be to have those conditions dictated from less regulated or uncertain players.
That's like one massive benefit, right? We definitely don't want Apple coming in here. Oh, well, they kind of already are with Apple Pay to a certain extent, but we don't want Amazon and all these other companies basically just issuing their own native tokens, and then we start using them for our mortgage, and we pay down traditional lending, and we get paid in other currencies, and now all of a sudden we're outside the tax system. So how much of this is actually really about protecting New Zealanders now and not just protecting the current status quo?
Yeah, so, I mean, they're good questions. I think, first, I just want to draw your attention to one thing that I think people overlook, and that's tax, right? So the reason that when you buy a coffee with a New Zealand dollar and you don't pay a gain or a loss on the value of that New Zealand dollar, because it's our legal tender. In New Zealand, that's how we transact, right? The New Zealand dollar is the mechanism to transact tax-free in New Zealand. If you tried to do all of your transactions using grams of gold, if you just went through the process, the thought experiment, then you would have a gain or loss on the value of that gold every time you transact. Then it might only be 10 cents on that coffee and 3 cents. So because of the fact that the legal tender of the US or New Zealand or wherever it is the way to transact tax-free, that's a real barrier to these other tokens becoming en masse adopted. Okay. It doesn't mean it can stop it forever, but that is something I think people overlook. So now, yes, how do you get people comply is another challenge, but I think the ability to transact in the legal tender of a country, the only place where you can use Bitcoin and not have any tax impact from spending it is El Salvador, because it's legal tender.
That's right.
Right. So that's the first bit I guess I just want to touch on there. Cool, but the sovereignty bit, absolutely. Whether it's Apple coin, Amazon coin, or Bitcoin, right, or Ethereum, the risk that's facing the central banks around the world, and it's one of the reasons why they're leaning into central bank digital currencies, I think it's really twofold. Part of it is protection. They don't want to lose the levers and control of the monetary system in their economy. So if you start getting more and more of your economic participants in your economy using a money outside of your control, the levers you can pull just get shorter and shorter and shorter.
You lose effectiveness.
Correct. So if you play this out, if New Zealand said, right, we're never ever going to produce a digital dollar, right? If we were to say that, we would then have innovators and business people, when it made sense, or consumers saying, I'm going to buy my Amazon stuff using Ethereum because I don't pay bank fees here. I'm going to pay Darcy back for the lunch we went halves in Bitcoin, right? So you if there's functionality that exists outside of an analog New Zealand dollar, we run the risk of people moving to those other types of value exchange.
Makes
right?
sense.
So there's absolutely that sovereignty protectionism totally makes sense. The second bit, though, is actually a central bank digital currency adds an extraordinary amount to the levers that a central bank can pull.
That's right.
So not only do they protect themselves, they actually give themselves more mechanisms.
You can use the word control here.
But there's a whole bunch of other mechanisms they can use. So I'll give you an example, right? A really simple example is the US and Australia. New Zealand didn't do this, but whilst we had stimulus in New Zealand, in the US they literally sent out stimulus checks. Mm-hmm. Australia did that too at one point, and they send them out to adults in the economy. Please go spend. Let's try and get the economy. Yeah, let's try and get the country moving. Now the problem with helicopter money and those stimulus checks is a massive chunk of them don't go to where the government would like them to go, because they either pay down a credit card debt or they get gambled once and then go to the profits of the casino. Like there's a whole bunch of mechanisms where they don't actually, such a small proportion of them actually go to cafes and retailers and the things that they'd like to stimulate. Whereas using things like central bank digital currencies, whilst there'll be a lot of discussion around how this could be best done, it's absolutely possible to say, guys, okay, all adults in New Zealand, here's $1,000 that can be spent on retail and hospitality, and you've got 1 month to spend it, right? And if you haven't, it's expired. So those types of levers are extraordinary. The ability for them to target money at areas of the economy where they want to stimulate more. They might say, here's money that can, or here's digital dollars that can be used for tourism in Queenstown, right? So it's clearly there's a lot of thinking that would need to go on how that would work, but the central banks are really excited about and just, really curious around how the central bank digital currency actually allows them to more effectively manage an economy through its economic cycles. You mentioned the word control. What the central banks are trying to do is prevent boom, bust, boom, bust. They're trying to do this.
Yeah.
The CBDCs potentially give them more levers to do that.
Totally see how that can happen, right? Because you're going in there with precision, not with a sledgehammer.
Correct.
That makes sense. So it's not like you're indiscriminately increasing the cost of money, but only to those who have debt, to a certain extent.
Correct.
Simplifying it. But you're actually climbing into their wallets and you're saying, for a season, you're incentivized to spend money in this industry, which we've identified is not necessarily as inflationary as this one. Therefore, we want the money to go there. Or you could say to the beneficiary, we don't want you to buy so much bread this week. We want you to spend it on shoes or something like that, right?
So yes, and look, and that's where you've touched on, that's where there needs to be, and there will be a lot of social debate, right? The technology allows a really worrying amount of government control. There's a lot of criticism of them around the potential they allow. So for example, the fact that the government could, the control that they would potentially have over the money you have. And you take that example that someone's told, okay, Darcy, you've had too many burgers this week, your money can only be spent on healthy food now, right? So from a liberty point of view and freedom, those are some really important things that we must make sure they don't happen. But where I kind of get to on that is, just because the technology exists for the government to have a video camera in everyone's house doesn't mean we let them, right? So the technology for digital currencies issued by the central bank to allow more efficient transacting, for around letters of credit, to allow offshore trade and payment systems to be miles more efficient, we need to bank that and just, like other technologies, not let the government overreach with how they're using them about our freedoms and privacy.
Yeah, and I guess those who probably have a slight more libertarian tendency, not myself, of course, but those who would be like that would probably be quite cynical around giving the tools to government to do that and taking back in exchange for those tools the word that they won't use it for evil, because that's true today. But I guess the paranoia would set in that, hang on, we've seen a few examples of the past where that doesn't work out too well. So,
yeah.
But again, is this inevitable that we're going down this path anyway, right?
Like I think we're going down central bank digital currencies anyway. It's a long time before we have only digital currencies. But there's a couple of kind of implications of CBDCs which I wouldn't mind touching on.
Yes, please.
One is that the very point you described, I think, is why Bitcoin will have a long future. It'll be the currency that isn't within the government's grasp, right? So when the world is transacting value more and more and more digitally, and CBDCs are normal, and that's just kind of how we transact in an easy way, and it'll be seamless and you won't really even realize it. At the moment, the way that you have your privacy and liberty is around cash and gold, right? Those are two of the ways in which you can transact value with another human. Bitcoin will increasingly be, I think that'll be the digital way that you'll do that.
Like for me, that's really helpful, right? Because now I'm kind of thinking, right, well, now there's another use case for Bitcoin as an offset to the paranoia that the libertarian would have about the coming CBDC.
100%. And that's where, so I'm pleased that resonated, because to everyone who tells me that CBDCs, so some people will say CBDCs are going to destroy Bitcoin. I'm like, no. I think they will enhance the adoption, because once kind of a normal adopter, like a mainstream New Zealander, starts having value digitally via a CBDC, then they go, oh, I wouldn't mind some of this money in my digital Swiss bank account. And that's where, China is leading the way with their CBDC. Obviously, there's an extensive amount of commentary on how that's going to play out in the China environment with a central bank digital currency there. And it's going to be really interesting because they're leading the way around the pilot. They've already piloted their digital currency, but they've banned Bitcoin. So they've banned Bitcoin because they don't want that option for their economy. They want it to just be their central bank issued digital currency. So what that kind of means is that in a strange kind of way, I think it's going to be fascinating looking forward 5 years, 10 years, that it's almost like making Bitcoin more attractive because the central bank currency of China is controlled. And what's the digital version that's not?
I think this is a really good way to frame it for those that might be paranoid about the CBDC, right? Like it really is the thing that might actually keep an accountability piece going, because right now it feels like a lot of what we the people want often doesn't get heard by the people that we the people elect. But if you actually have a viable alternative that you can actually transact with, why Bitcoin actually starts to become a lot more relevant.
Correct, and that's where Bitcoin, at its core, is like I said, a global payment network and a storage of wealth, storage of value, right? And where that's interesting is that if our great-great-great-grandfather saved 10% of their earnings for 5 years and buried it for us in British pounds, it's worthless today. Because that mechanism to store value, i.e. money from Britain 150 years ago, that has devalued so much. So we're lucky. We've got people like Darcy who help us choose investments, and the answer that I often get is, we don't need Bitcoin. You just need to invest in bonds or stocks or equities or real estate. And once again, that's fine if you from a sophisticated economy and you've got trusted institutions to do that.
Yeah.
Right? Whereas if a lot of the people in the world, their wealth is in money, it's their savings in their bank account. And the purchasing power of that saving in their bank account is being changed every month by the decisions of the government that are totally outside their control.
That either. It's not just that, it's actually everything that's denominated
in correct.
Dollars, yeah.
No, that's it, but that's right, the purchasing power is changing.
Yeah.
So that's where one of the things about Bitcoin is, no one knows what the future value of it's going to be, but if you own one Bitcoin, you own an untamperable 1/21 millionth of the Bitcoin network. So at any point in time, your one Bitcoin will represent 1/21 millionth of the value that's been put into Bitcoin. Right? Now, at the moment, the value has dropped because in this current environment of high inflation and economic uncertainty, people are pulling their money out of their value, out of the Bitcoin network. So at any point in time, the price of Bitcoin is just the current measurement of the value in the Bitcoin network.
Yeah.
Right? And that's where you can't tamper with that. And I heard this great analogy around it, which was if the price of gold if it tripled overnight, then a whole bunch of mining mechanisms will become economic that were uneconomic. That's right? Yeah. We'll be scouring around for grandmother's chain and so on to melt down because it's economically viable. Bitcoin could hit $1 million overnight and nothing will happen to its supply. So Bitcoin is the first form of value storage that humanity's ever had that supply can never be impacted by price or demand. Right. So that's fixed. So what that means is that humans will choose over the coming decades how trusted they find the Bitcoin network to store value in. If it loses trust, then the price of Bitcoin will keep going down and down and down and down. But if the adoption increases anywhere near like its current path, people are adopting the Bitcoin network for a small portion of their wealth.
Yeah. I think I'm starting to get that. Going back a little bit just around the concept that this is a good thing. I'm going to still stick with the concept, not necessarily the hope that it's a good thing. Or the
of
fact
CBDCs.
That it's a good thing. Of CBDCs, correct. If I was just to flesh that out a little bit more, I'm thinking I generally need to use the internet to access Bitcoin. Generally, and I know that mathematics kind of go beyond just the internet, but let's just assume that to get my Bitcoin off of my hardware wallet, if I didn't keep my passphrases, let's say, I've lost it without the use of internet. If I was regulated from using the internet, then in theory, I might be forced into just using the CBDC. So what about that risk that because of, say, digital IDs and effectively an internet user's license, which is linked to the value that we have with these CBDCs, could we be restricted from actually even transacting with Bitcoin in the future?
Definitely internet access is required for any e-commerce internet business to use Twitter, to use Bitcoin, right? So internet access, if that's ever restricted, firstly, I don't know how realistic that is actually to do. I mean, and the reason someone gave the example, China's had the internet banned for decades, and yet every house in China pretty much has Google, right? Because it's really like the internet is a decentralized network, right? If there was a way that the internet was banned, then that would absolutely affect your ability to either use a digital dollar, whether it's central bank issued or not, right? But as soon as you give internet access, then they both work.
So, like, I'm looking at my bank. Well, I'm not looking at my bank account, but if I was looking at my bank account, I'm just looking at a digital representation of what's in my account. So, what is the difference here between a CBDC and just what we have right now?
Yeah, absolutely. So, look, that's a really good question, right? So, basically, a digital dollar lives on the blockchain, right? And once it lives on the blockchain, it will be on a smart contract blockchain, and that's the fundamental key point. It has become programmable money. So it is money and value that can have preset conditions programmed into it, and they can be as simple or as complex as is needed for the transaction. So what that means is our current money and Bitcoin is dumb. It is literally just value that has to be given or received. That's and the only way we can decide how money currently is given or received is by humans deciding to transact, right? And typically that comes down to third parties. Accountants, lawyers, banks, insurance companies, Western Union, you name it, right? Whereas one of the innovations of the blockchain is this concept of smart contract blockchains like Ethereum. So what that really means, Darcy, is and I'll give you a really simple example to make it nice and easy. We've got the Blues versus the Crusaders tomorrow. Okay. Let's hope the Blues win. If we have, let's say we have a $100 bet, right? Now, one mechanism in a analog world, and we don't trust each other. So let's say we don't trust each other, and we have a
you're a
$100
Blues
bet.
supporter.
Well, you're a Crusader supporter, I take it, right? Red and black. So we don't trust each other, and maybe that's because we don't know each other. So we're two parties that we both want to put $100 into this bet, and if the Blues win, I get both the $100, and if the Crusaders wins, you get it. Now, without a smart contract system, the only way we could do that is to have a third party we trust take the money. With a smart contract, what we would do is we would both commit into the smart contract the actual $100 of digital dollars in there. And they would actually go into that smart contract. So they've left my wallet, they're in the smart contract, and likewise is yours. That smart contract would be coded, and it would have the parameters enshrined in there when we put it in that can't be tampered with, because that's the beautiful thing about the blockchain. The reason it's immutable is you can't ever revise anything. It just keeps charging forward. So once it's locked in, that's it forever. In that smart contract, it would say, at this time, New Zealand Standard Time, so at this time, look at this oracle. Now, this oracle is the term they use for a trusted source of data, right? Now, these data are, and the data could be the current interest rate from the Reserve Bank, or
it could be the TAB score.
Correct. Right. And it could be, the Radio New Zealand News score update or API feed, right? Yeah. But it will look at that oracle, and depending on who's won, it will send the money. And that's just a really simple example of a smart contract and using programmable money. Now, that sounds like a simple example for the sake of us just trusting each other to have a bet, But when you start thinking about that functionality for things like you sending me $100 million of product from Asia, and instead of spending money on a letter of credit,
Exactly. Yeah.
we put money into a smart contract. It's not till the oracle of the shipping line, the government, the Ministry of Customs says, yes, it's arrived. That's the oracle click that the smart contract releases it. The concept of programmable money, and there's much more, clever and innovative ways. I mean, it's almost exciting thinking how innovators will use this concept of programmable value. I mean, we could say, let's have a bet for the next 2 years on Blues versus Crusaders, and put $1,000 in there, and every time they play, it checks and passes back $50. There's all these ways, but the money has become programmable, and there's no third party there, and there's no one that we need to trust.
It is quite phenomenal when you think
Correct.
about it. And it goes back to that example before with the Uber app, right? Where it's the convergence of a couple of things in that realm that's where things really start to blow people's minds.
100%. And look. That's exactly, and that's where DeFi. So we talk about decentralized finance, right? So I think kind of at its core. So take with the internet. You used to have a physical shop that customers would come into, and they would buy goods from you, and they would take them, right? The internet has come about, and now no physical shops needed for that transfer to occur. You can go online, buy something, and order it. When you think about decentralized finance, it's kind of the same thing in the sense that now it can happen to finance.
Yeah.
So the value that someone has in Sweden, so someone who wants to lend $1,000 in Sweden, provide that value to a New Zealander who wants to borrow it at 5% interest, that can happen entirely driven by a platform, a digital platform.
Yeah.
And because that value can be digitized.
Got it.
Right? Now, we're in the embryonic stages of that happening. Of course, there's some high-profile failures in that space, and we've witnessed some of them recently, the algorithmic stablecoin of Luna and so on. Celsius, that's right. And that's where, frankly, if you want to have a laugh, go look at YouTube clips of the view of business cases of the internet in 99, 98, 2000. I mean, there's times where we didn't think anything other than books would be sold online.
Yeah.
So that's where decentralized finance allows the concept of financial exchange, borrowing, spending, saving yields to happen, but driven by a platform, not driven by a, frankly, cost-heavy institution.
Yeah. It takes a little bit to get your head around it because these are thoughts that your brain might not have had before.
Correct.
But it's kind of like when you're trying to imagine what the metaverse might be like, it's just kind of like an inversion of reality where instead of, I guess, looking at something digital, it's more like you're already in the digital and you're looking at a representation of yourself. And it's the same sort of thing with this value thing. Instead of it being the thing external to it, it's kind of already in the digital layer. It's weird when you try to get your head around it.
It's weird for our generation, right? It's not weird at all. If you're under the age of 20, it's not even. I mean, they'd be sitting there going, "What do you mean that's weird?"
The digital natives.
Yeah, well, correct. And because my kids, they always want Roblox vouchers and they buy digital pets and it's in Minecraft and Fortnite. So this concept of digital things having value, that's a challenge for us. It's not a challenge for the next generation. Right? That's right. And also take the metaverse, right? I there's some incredible, we're so early days and some incredible thinking happening around the metaverse. For me, I think that two things personally define what the metaverse is. And maybe this is too simplistic a view, but I think it's really misunderstood. One is I think the metaverse is just a more immersive internet. Right? So the experience you have is more immersive. Now that might be all the way into the 3D, the virtual reality goggles on, but it might not as well. The second bit around the metaverse, so it's more immersive, but the second bit which makes it the metaverse and not just the old internet is the digital economy. And value can be transacted in the metaverse. And that ranges from NFTs to digital clothing, true digital scarcity, true digital items, and true digital currencies means that economies can exist within that metaverse.
And bringing us back to CBDCs, that's where it gets quite fascinating, because
Correct.
I kind of get it now in a
Yeah.
sense, because it creates the connections that we probably need for that innovation to happen.
Well, yeah, and you think about that protectionism point of view as well, right? Let's say the Reserve Bank in New Zealand said, look, we're not interested in central bank digital currencies, right? So then that currently leads, like there's one very simple path that leads to. If you're a business owner that wants to make use of much more cost-effective letters of credit via smart contract. So fast forward 5 years, it's common to use a smart contract. If you can't use a New Zealand digital dollar, then you're forced to use the Australian digital dollar or go and buy USDC stable coins. So the functionality of programmable money and the innovation that programmable money allows is going to happen regardless. By having a central bank New Zealand digital currency, it means that participants who want to use that functionality but not be exposed to crypto or Bitcoin or that volatility, they can do that.
Okay, so just kind of changing tack a little bit, just so I can I'm trying to remember all of the concerns that I've heard people express around CBDCs, just to get your take on it. You've kind of nailed a few of them, and I'm trying to remember a few of the other ones, but one of the other extensions of the concern, I guess, is a sense of 1984 Big Brother. There's just way too much control, and when you look at some of the policies and some of the practices exhibited by the Reserve Bank following the COVID pandemic, especially March 2022, it looked like they were singing from the same hymn sheet in terms of their response. Everybody gets the same medicine, irrespective of the illness, economically speaking. So now I'm looking at this and I'm thinking, clearly there's probably a little bit of looking over our shoulder to see what they've done in this space as well. So maybe it's not necessarily people working in tandem, but how connected do you think central banks are around this?
Yeah, I mean, the Big Brother thing's really interesting because ironically, crypto is criticized for being too opaque and, I guess, dark web. And, the irony is I actually think in terms of mainstream adoption, the biggest problem crypto's got, it's too transparent. It's way too transparent, right? So, and here's what I mean by that, although it might sound quite provocative. If you find out one NFT I own, whether it's an NFT of a work of art or whether it's a commemorative poster of, a concert, you then have my address of my wallet because it's public. Everything is transparent on the Ethereum blockchain, on public blockchains. That's one of the things that gives it the safety and the immutability, right? That there's no secrets, right? So once you link a person to a wallet, then you know everything about my transaction history. Literally, my bank account is up there for you to check.
You can see everything that you've done.
Correct. So it's so transparent that one of the challenges is whether it's CBDC or something like Ethereum or Bitcoin, one of the challenges is there's such a distinct lack of privacy with blockchain and public blockchains. So
and that might surprise a lot of people.
Correct,
right? Yeah.
Correct. And that's where the adoption's so early days. And look, the great work that the regulators have done, in my view, in getting the crypto exchanges to KYC people, that's done a phenomenal job in reducing the risk of money laundering and illicit use, right? But for the vast majority of people who own crypto and normal people like you and I, we give our passport over and they take our they KYC us, and then they exchange our normal dollars for crypto. From that point, they can follow. They got breadcrumbs to every single transaction we ever do in the metaverse or on the Ethereum blockchain. Likewise for a CBDC. So where that leads, I think, to, and frankly, there's a strong argument that CBDCs will be on Ethereum, right? I mean, that because you want CBDCs to be on a very sort of bulletproof blockchain.
Sure.
The governments may choose to have their own blockchain, but I mean that'll be a decision, strategic decision they make. But let's say it's on Ethereum, right? Yeah. Like some stable coins. The problem is everything's so public and transparent. Some of the thought leadership around this is that there'll need to be ways in which digital cash truly exists.
Okay.
Where you've got private cash. So just like you can take $500 out of a cash flow machine, and you can go and donate $100 of that anonymously to a charity you support, that mechanism doesn't exist really in the crypto blockchain world.
You're right.
It
It's
doesn't.
pseudonymous. It's not anonymous.
Correct. And as we're getting better at AML, people, so I think, so look, I think that we don't know where that's going to end up, but I think there's a high likelihood that there'll be two layers, or there's a likelihood that there's two layers of anonymity that will develop. One, there will be innovation in the decentralized space or in Ethereum, Bitcoin, that truly anonymizes spending.
Sure.
Right. So if you decide that, and frankly, that'll be used for good and bad, right? But it'll be just like normal cash is used for good and bad.
Yeah.
Right.
Yeah. That's right.
In the decentralized world, I think in the CBDC space, I suspect what they'll need to find is a middle ground where, whilst the government, the regulators, the banking authorities, provided the right warrants and so on are in place, have it, they can get to it, but I can't check up on your spending.
Got it.
Because right now I can check up on all your crypto spending.
I know, it's crazy, isn't it?
Correct. So that's that middle ground with CBDCs is the big brother element, not even the big brother, it's your fellow.
That's right.
It's so there will be a privacy and digital identity layer, which is a whole lot of potential, but that hasn't really been solved yet.
Okay, so time frame thing, you kind of thrown out that 1 to 2 decade thing. I know that the people that would be really concerned are almost of the view that this is happening right now and we need to panic and buy property in somewhere else and just live in a cave, right? I can kind of see from a few different angles why that's just not even possible, right? Because it feels like, again, innovation and central banks just are two words that just don't seem to work together in my mind yet. But either way, even when they do start to do it, they're probably going to have to reiterate and try it and experiment a few times. There's going to be some failures.
Look, absolutely. And look, the way that I would describe it to all of those people thinking how this is going to work, you know what? Think of a credit card. Credit cards didn't used to exist. They were literally not a thing. And then we had this concept of a credit card, and you could give your credit card. There would have been a point in the adoption of credit cards where people said, I don't want someone keeping track of my spending that's not the bank. That would be a thing that people opted into if they felt the functionality of a credit card was helpful.
Correct.
And the people who didn't kept spending cash.
Correct. Yeah.
And I think that's what you'll find with CBDCs, is that they will be made available, let's say, in I'm just having a guess, there might be 1% of the New Zealand dollars on circulation that are digitised, right? And for those businesses and consumers and innovators that want to offer use cases where programmable money is quite helpful, they'll go and get some digital New Zealand dollars, right? Whereas those who don't will carry on in the normal system. And so I think you'll find I suspect for at least 10 years, your life won't even be impacted at all if you don't want to use digital currencies. A bit like if you wanted to avoid the internet. It's probably taken 20 years, I suspect, before it's really hard to not use the internet.
Yeah, it's difficult actually, isn't it, right now, to live without having an online presence. So that's kind of like analogous to what you're talking about.
Correct. That if you don't want the utility of that, then you won't opt into it, right? But like I said, like businesses will go, you know what, that letter of credit is a good way to do it. And frankly, the Reserve Bank's challenge is, can they arm New Zealand businesses, or do New Zealand businesses just increasingly use US dollar stable coins, Aussie stable coins, right? Yeah. For those purposes. But it'll be like most innovation, YouTube's adoption has increased as high definition streaming's increased, the infrastructure of high speed broadband's increased, right? Yeah. So we're in the stage, I think, of digital value transfer, decentralized ledgers, and digital currencies. We're at the stage where it's working, but it's so early days. It's like Skype calls. When Skype was only used by students and kind of
that's right.
techos, right? And now it's kind of like, let's jump on a WhatsApp call, a Skype call. It's just
it almost doesn't matter. It's just
correct. It's seamless.
Yeah.
And that, but I guess the point I was trying to make there is utility drives adoption.
Yes.
So if people don't want the functionality and value of adopting into that digital currency, they won't bother. Right?
So utility drives adoption, but you got to acknowledge that it is possible that also fear could drive adoption as well.
Yeah.
Coercion and desperation, right? Like, there's got to be a dark side here somewhere. Like, do you see any
Oh no, I
inherent
think
risks of
I,
this?
no, I definitely see risks.
Yeah.
100%. I do. I totally see risks. I mean, the risks are the way in which, like any new technology, that the government and institutions choose to deploy it.
Yeah.
Right. So I mean, you might even find that the first examples of a digital currency in New Zealand is only used by the wholesale market,
Right.
and the banks use it to settle up with each other. And there's some really great innovation happening around with Dave Corbett and Power Finance and the likes of those businesses that are really trying to innovate in the finance and banking space with the traditional finance. The concept of a New Zealand digital dollar doesn't necessarily, like in its first iteration, doesn't necessarily mean, okay, I've got an app on my phone and all my spending at the supermarket is in digital currencies. There's that quote about technology, which technology should be beautiful or invisible. Right. And I actually think in a lot of ways we may find that digital, like CBDCs, actually become invisible. I mean, at the moment, we pay wave our Apple Pay, right? Now, the fact that that's driven by some quite clunky old school rails, if that was a seamless blockchain-driven CBDC behind that, it hasn't changed my user experience at all.
I hear you. So little by little, all at once, perhaps. But let's now just maybe come in for a landing here. And I kind of think, as I operate like a consumer, I usually deal with a retail bank, but that's private money. And then we have this other kind of money that already exists. So I don't see a future here with CBDCs long term and retail banks. Can you talk to me about that evolution there?
I personally think that, a little bit like retail, Amazon hasn't destroyed all traditional retailers. It's just adjusted the market, right? So the internet and online retailing hasn't destroyed, it's just changed the market dynamics. And I think personally it'll be a little bit similar with finance. But you're absolutely right. A big change is going to be the simple fact that via a CBDC, you literally can have an account direct with the sovereign. So in some ways, like if you can earn your New Zealand dollars into your account on the blockchain direct with the sovereign, you kind of, if you earn money, spend money, and that's your banking relationship, like you kind of don't need a bank.
That's right.
You can certainly put an argument why you wouldn't need a bank, right?
That's right.
And the central bank, if your banking needs are simplistic, actually becomes your bank.
That's right.
You just need a place to store your value, which is your New Zealand digital dollars, and a mechanism to spend it, which is swiping your phone.
And we struggle to see how that would work with all the complexities of the current banking system right now, but we're forgetting to factor in technology and innovation between now and when that's actually happening, right?
Well, yeah, and although we say we struggle to see that, right, like it's really, you think about your Ethereum wallet address. If you had you'll just have a wallet address with the central bank, and that would be tied into your real me, or let's say your real me had an NFT attached to it. When we start solving those digital ID, when actually truly that's quite simple to authenticate that that's Darcy. So then you've got your wallet address, and that's your kind of New Zealand central bank wallet address.
That's right. It's not that hard. Like if you have MetaMask installed
Correct.
in your browser and you're using your smartphone as doing biometric scanning.
Correct.
We're already kind of there.
Correct.
But again,
it'll kind of feel like your app with ANZ, ASB, or you name it, right?
Yeah.
It'll just be with a blockchain address. That's the only difference, and the blockchain address will deal with the money can go straight into that wallet, and it's come from the central bank.
Yeah, I still can't shake the sense though that when you go to get a needle, it'll just be a little bit of a scratch. It's like So I kind of get the sense that you're generally for it, right? Like you think it's a good thing, right?
The reason I'm generally for it is because I think that the innovative potential and the functionality of programmable money is going to be really powerful.
Sure.
Right? But I totally agree that it's not something that we should rush, and it's not something that we should charge into without thinking about privacy, liberty, and those types of things. But I come back to my other example, just because the technology exists for recording mechanisms and cameras doesn't mean the government has got one in every one of our houses.
Yes.
Like their technology is capable, but no, they don't. So just because it's potentially possible for them to control our money via a central bank digital currency doesn't mean that they will or should.
Yeah, there's layers of reasonability. They also have an army, but they're not destroying their
Correct,
people, right?
correct.
So that makes sense. So thanks very much, Scott McLiver, PwC. If people want to reach out to you because they think that what you can do for them, then obviously they can find you.
No worries. Thank you, Darcy. It's been great to be here.
All right, good one. Hey, that's it for this one. I hope you enjoyed that one with Scott McLiver and I. It was a fascinating discussion around CBDCs. Make sure that you like and subscribe if you like more of this sort of content, and we'll catch you on the next one.